Happy Friday, everybody. Welcome to the Taxman's Tidbits. Today we're April 23rd, so tax season is coming to a close really soon. Just as an offhand remark, as of today, Revenue Quebec has agreed not to impose penalties or interest for anybody that files no later than May 31st. CRA has still not given us the go-ahead, so as it stands right now, all tax returns that are normally due on April 30th need to be filed on April 30th. And therefore, for those of you who have rental properties, unfortunately, if you don't have self-employed income or partnership income, you need to file by the end of next week. That being said, I thought it would be a great moment to maybe discuss today a few of the expenses that can be claimed when you have a rental property. And we're doing quite a lot of rental properties for our clients, and we're always trying to find ways to reduce the tax bill because there's no point in earning a lot of money if you've got to give it all to the tax department. So one of the things I thought I would talk about this morning are the repairs and maintenance. I get to ask this question quite often. Can I expense all of my repairs? And the straight answer is maybe. So what does that mean? Well, it really depends the nature of the repair and whether the repair meets the criteria for a capitalization. So for those of you who are not familiar with that term, what it means is that rather than writing off the entire expense in the year that you incur it, you need to capitalize it and amortize it over usually the life of the building or perhaps a shorter period depending on the type of repairs. So in essence, Canada has a few criteria. And Quebec follows suit. First criteria is, does the expense provide a lasting benefit? So for example, if you were saying, well, I'm painting, apartments, and we're painting apartments on an annual basis, so it's something that's current, meaning I'm not going to paint it once and leave it for 40 years. I'm going to probably do it every year, every couple of years. That normally would not meet the criteria of a lasting benefit. At the same time, if you did some repair to the brickwork outside because you're in an area where the sun is hitting the wall constantly and you're always repairing the cement between the bricks, that's again not a lasting benefit versus I'm changing the brick and I'm going to let it sit there for 40 years. So that's obvious stuff. Does it maintain or improve the property? Well, that one's a little different because oftentimes it's a question of you're fixing something, but by doing that, are you making it significantly better and improving the value of the property? And if I had to come up with an example for that, let's talk about balconies. So you buy a property and a few years in, you decide you want to repair, fix, replace the balconies. The initial balconies were wooden balconies, and you decide you want to convert that to concrete balconies. Well, you've clearly improved the property, and most likely the value of the property is going to increase through that improvement. So ordinarily, CRA and Revenue Quebec would say that is not a current expense, that is a lasting benefit, and therefore you should capitalize it. Another example would be if something, for example, is it the expense a part of a property expense, or is it something that's for a separate asset? So I'll give you an example. Oftentimes, you have to call in an electrician to do some work on wiring. And that's one of those areas where it's a gray area, and we've really got to look and see, is this part of a larger project, or is this something that's really specifically geared towards a problem that you had? So just because you're replacing the wiring, it doesn't really mean you improve the property. It means you brought something that was basically, out of the norms into the norms. And by doing that, you're just maintaining your property. Now, for example, if you're changing the electrical panels and you're upgrading the voltage and amperage and you're making significant changes because the property, which was built in 1910, didn't have the adequate amperage, well, now you've done an improvement. So as you can see, it's not a black and white issue. It's really case by case, and you need to really sit with somebody who understands the rules to break it apart. Now, it doesn't mean it's an all or nothing. You go ahead and you do renovations, and you can take that bill and break it up into components which are capital in nature, components which are current in nature. Keep in mind, though, that the government, when they audit you, will look at what was your mindset when you did this. So I'll give you a perfect example. You acquire a property. You acquire it, and in the first 6 months, a year, you improve the property significantly. You rip out all the bathrooms, you rip out all the kitchens, you redo it all. In that case, more likely than not, the government is going to say, look, you are improving the value of this property, therefore you should be capitalizing all these expenses. And most of the time, you're not going to go through your bills and say, well, this little portion of the painting was really, of the kitchen repair was a paint job, and we're not going to capitalize that. We're going to expense that. You could do that if it amounts to significant amounts, or you can just capitalize the whole amount. You're never going to lose that. You're just going to add it and depreciate it over a period of time. So if anybody has specific questions with regards to renovating properties, definitely, we're always here to answer those questions. Another expense that I'm asked about often is travel expense, and that's something that many people don't even think about. I'm shocked at how many times I look at tax returns and I don't see travel expense. So in essence, what's travel? Well, travel is the expense you incur to collect rent, to supervise repairs, and to manage your property. But there's a little bit of a nuance in terms of, can you always write off these expenses? And the answer is no. It really depends on how many properties you own. So for example, if you only own one property, the criteria are that you have to have the property in the general area that you live. You can't say, well, I have a property and it's in Calgary and I live in Montreal, and I'm going to deduct every year my expenses for travel and for airlines and all that because I've got to go there and collect my rent. In essence, what the government is saying is, first of all, if you only own one property, you may not incur, well, you can incur, you may not deduct travel expenses to collect that rent. So that's a big thing, because I have a lot of individuals who come to me and say, well, I've got a property located, let's just say in Trois-Rivières and live in Montreal. It's only one property, and they want to deduct car expenses to go get rent. Unfortunately, that's not going to be allowed. What you can do, and this is where you get into the nuances of the law, is that one, you've only got one property, it's in the general area that you live in. Okay, so Montreal, you want to go Montreal, maybe to the outskirts of Montreal, Laval, the South Shore, Trois-Rivières, now you're pushing it a little bit, but perhaps you can get that to work. But more importantly, you personally do all or at least most of the necessary repairs yourself. So now you are actively involved in this. It's really it takes time from your day, and the government now is more cognizant of the fact that you're probably going to have to travel because you're going there to do this work. And thirdly, you're using your car to transport tools and materials and so forth. So these criteria all have to be met. So if you're telling me you're driving a Mercedes 500 and you're using this to transport lumber, most likely the government's going to say we don't agree that you can write off that car, because writing off the car means lease costs, you can depreciate the car, of course, in gasoline repairs, insurance, and so forth. So it's really a question of, does it make sense? But if you own more than one property and you own two properties, well, now the rules are a lot more lenient. First of all, you're allowed to deduct your car expenses to collect the rent, which could be significant depending on how often you're going to collect rents, because sometimes you don't collect everything at the beginning of the month, and also the kind of car that you have, because the expense could actually be worth something. Supervise repairs. Now you don't have to do the repairs yourself. You can just say, look, I'm hiring contractors, but I got to go and supervise because, you got to make sure the work is done properly. And to manage the properties. Managing the properties is just making sure that everything with the property makes sense. So that's a big expense that most people forget. And oftentimes, if you're already writing off these car expenses as a self-employed individual, it's really not worth even going through it, because you'll qualify much more easily as a self-employed. But if you're not writing it off, and you could save a few $1,000s, it's something that you should look into. Keep in mind that it has to be reasonable. So all these expenses must be reasonable. You have to keep receipts, and of course you've got to keep some sort of a log that tracks your business versus personal mileage. That's a big one, because when you get audited, they will ask to look at that. What do I mean by reasonable? And I see this all the time. You have to, if you've got a property and you're generating $20,000, $30,000 a year of revenue and you're deducting $2,000, $3,000 a year of car expenses, most likely this is going to be considered reasonable. But if you're just renting a little unit and you've got $10,000 of expenses and now you're trying to write off a $5,000 car expense, guess what? It's most likely going to get challenged. So that's all for today. Getting back to my tax returns, got a lot of work to do for the rest of the month. I wish everybody a great day. Looks like the sunshine is out again. And I look forward to seeing everybody, or at least talking to everybody next week during the next installment of the Taxman's Tidbits. Have a great day, everybody, and happy investing.